so dedicated to this conference that I'm here despite having a newborn. And I'm even more dedicated than that. It's slightly rearranged today. I wasn't quite sure when this conference was when I agreed to it. Today's actually my birthday as well, so if there isn't a more dedicated person to today, I'd like to meet them. Yeah, thank you. If that doesn't help me have a lesson audience, a little bit. So, open banking. How do we harness the true value? It's been a while since open banking has launched, and I think the banks have been completely preoccupied with meeting the regulatory objectives, which have been in the UK for some time from the CMA, but now being imposed in many other countries around the world, following the UK and the European model. And the key question I think now that banks are waking up to is this a threat or is it an opportunity? Are banks at risk of losing their key touch points with customers? Are they at risk of being disintermediated? Can they maintain relationships with customers, and what do those relationships mean if all the data that we hold about a customer and indeed your key transactions, so your payments, can be conducted by someone else? Well, I think we've got to start breaking down the question of whether or not it's a threat or an opportunity by looking at what it really means. And I think the first question about data and what open banking sharing means is a really interesting one. You might think transactional information from one's bank account might tell you how much you spend on holidays or how much your mortgage repayments are. Simple financial matters like that. Maybe how much you spend on paying your credit card. But it can go so much deeper. If you think about the nature of your transactions, it can tell an awful lot about you. We could probably predict quite easily without knowing whether or not you were married. We could probably tell you whether or not you were sticking to that marriage very neatly or not. We could probably tell you whether or not you were wearing glasses. We could probably predict whether or not you insure your house and whether or not your insurance on your house is sufficient and whether or not you insure yourself going on holiday. By analysing whether you buy drinks at concerts, we can understand your taste in music or economy. We could probably predict who you might vote for. We can understand your waking hours and your shopping habits, your risk appetite for investment, even your popularity as a human. We can probably understand your own transactions. So you could begin to really understand a business or a person in some depth. And this is where other nations who've gone first in sort of moving to a digital infrastructure that's away from the banks, which is what open banking can really make possible, has led us. Where there hasn't been banking and payments infrastructure to deliver a modern economy that's flexible and easy and inclusive, in Africa and in China in particular, you've had mobile-first platforms like WeChat, WePay and Alipay in China, or M-Pesa in Africa, introduced on the back of whatever technology is available, an e-wallet, an ability to make payments, and some sort of form of financial inclusion. And that's brought people in to that data stream, right, where you've got their transactions. On WePay, you can understand what they spend at the cinema, what they spend at restaurants, what drug prescriptions they might have from the doctor, as well as what income they might be receiving. And as a result from that, you can understand the same things about them, what we've just talked about that open banking might reveal. And that's really powerful because it brings in to financial inclusion a whole bunch of people who didn't have a profile, didn't have a credit history, didn't have the ability to save their remaining funds in their e-wallet, or indeed understand how best they could spend their money. And so, you've got to think that open banking is going to shift the West into a similar sort of mobile-based economy where there is more data and more intelligence can be applied to retail consumers. And I think Stephen spoke this morning about what that intelligence could do for automated investments. And you've got to think that, in 2021 and moving beyond that, cash, the idea of physical coins and paper money, or indeed checks, have got to have their day. I mean, getting a check now, even if you can scan it on your phone and pay it in, is still a sort of cumbersome thing. And I sort of sigh if I ever get a check. And certainly when you had to go into a branch, it was a real frustration. But open banking and the payment initiation opportunities that exist on top of it, like QR codes or textable payment links that can be from any bank to any bank, instantly settled in the UK up to £250,000, means that surely this has got to go, but so with it would go paper bills for utilities and invoices between businesses or between businesses and consumers.
And so I talk about the tiers of open banking value, and we've seen a couple of them play out. There's the simple API aggregation. Across PSD2, across Europe, there's many different countries with many different standards. And indeed, in the UK, even though we've got one open banking standard and the API is very tightly defined, there's different versions, and different banks have multiple core bank platforms which might be on different versions. So we've seen players like TrueLayer, and we've seen players like Tink consolidate the APIs and provide one aggregated API for people in the marketplace. That then unlocks the data, and the next tier is analyzing that data and understanding businesses' cash flow, understanding personal consumer spending habits or financial risk profile or investment optimization, savings optimization. And these are the BFM and PFM players that we've seen in the market. And these are really important and can lead with the introduction of sweeping and variable sweeping next year in the UK to tax, savings, and all sorts of sort of audit automation and pension and investment automation, which I think will be the heart of those embedded finance PFM propositions that will come. But the next tier, moving into the third tier, is payments. And payments is the real sort of interesting story, and it's where we've probably seen the most success so far in players like Moneybox, who've been tremendously successful rounding up transactions using the open banking data, and then currently using direct debit to sweep that away. But you can see an open banking payment being used to round up those transactions to invest in a fund as they do. But you can see that that could expand massively into recurring payments that are really authorizationless in the way that they are when you get out of an Uber and shut the door. You could see that same sort of transaction taking place in your regular coffee shop, in your gym, when you buy a bottle of water, when you get into any store where you purchase anything regularly, that you could have a pre-authorized payment limit, and that sweeping transactions using open banking and using the data could anticipate your payments and mean you can just walk out that shop without interacting with anyone necessarily and having just taken a product or service and paid for it. But I think in payments is the real opportunity for something much more special. We say that paper and checks must have had their day, and the manual intensity around those must be a cumbersome burden that we don't need to live with anymore. But probably we can go much further than that. In invoices, we're still getting people to type in sort code, account numbers, reference numbers. Many small businesses that you interact with, many that will come into your home, and tradespeople are asking that of you. And indeed, many business-to-business transactions, and indeed one of the most serious types of fraud is we see is invoice redirection fraud. And we can move that on into a new generation of invoices that are smart invoices with payments embedded, where you could then understand the invoice and the cash flow that's coming off the back of it, and the banks could use that to lend against, even collecting the payment as it's coming in from whoever's receiving that invoice. And that is going to create an entirely different economy that can really understand the cash flow profile of both consumers, money coming in and out, and of businesses. And this can help us manage risk much better with that data, but also by intercepting the payments. I think what we need to consider beyond this is what consumer and business experiences are going to really embed open banking as a use case, because it's quite difficult to describe it. When television went digital, for example, in this country, every household in the country got a letter explaining what digital TV was. There was a digital tick that was on every digital TV product, both set-top box and television with it built in. And we really tried to communicate with people about what this meant and how it might improve their television experience. But there's been no such communication for open banking, something that's been billed as the biggest change in banking in 300 years. Yet people don't really know what it is, they don't understand it, and to be honest, why would they care unless it delivers experiences that they want? And I think that Uberization, that authorizationless transaction could be a great next step. You can imagine that you can walk into a store, your phone could be picked up by Bluetooth, low voltage Bluetooth to a proximity to a till. They could recognize your face, and that could trigger the transaction taking place. And I think those sorts of experiences, as well as being text or emailed, a smart invoice that you can pay wherever you are at whatever point from whichever account you want, I think those sorts of experiences would bring open banking to life in people's everyday experiences. And that really would start to deliver on what embedded finance and the prospects of it is about, which is that businesses don't want to do banking. And I know banks and accountants have been obsessed with the idea that banks, so businesses want to spend their time coming into branches, cashing their checks, bringing in their cash and collections for the day, doing their transactions, when really they want to get on with running their business. These are bits of admin that you have to do in and around running a business. It's not why you started the business. If you're a joiner, if you're a landscape gardener, if you're a plumber, you want to spend most of your time adding value, using your skills and delivering the services of your business. But you've got to do your finances and your accounting and your tax. And the question is, can we take advantage of this data? Can we link the open banking transaction that is embedded in your smart invoice that can be allocated against costs that we see in your open banking data to then calculate your tax, which can help be paid by open banking itself? If we can join all those dots, we can get this admin out of the way of people, allowing them to concentrate on running their business. And that's what we're trying to do at Santander using open banking. But I think the same is true in retail banking, where you can make open banking fit finances, experiences around their lives. As I said, I think payment initiation is absolutely key. And in China and in Africa, this is the key lesson. When we put payment initiation and e-wallets on a closed loop system in those markets on people's phones, and it made it very quick for them to be able to pay money away or receive money, request money, that's when it changed the game. And doing that at almost no cost was the thing that democratized payment experiences on WePay and Alipay to basically everybody. And you probably would have seen the examples of homeless people in China collecting money using WePay and Alipay, because even they have a mobile phone and can afford to collect money using that means. So let's have a look at consumer uptake and where success stories have been. Now, at this moment in time, we've had 2 million SMEs in this country connect their banking data using open banking in some form or another. And that's, 2 million is quite a high number. We've had 2.5 million connect to some consumer experience and permission their data. And, you might view that as a sort of sign that we've got critical mass of awareness of open banking. But I think we've probably got a lot further to go. In South Korea, in less than half the time that they've had open banking live, they've got 23 times the penetration, with 70% of the population having taken up and using regularly some open banking service. And I think in other markets where they've got the use cases right, rather than just the underlying infrastructure that makes it possible, you have seen those numbers take off. And so I think, the Eastern examples and the African examples that have been successful have been closed loop systems that have removed people almost entirely from traditional banking infrastructure. And they have been making payments on closed loop systems where the experience can be defined by the provider. And I think that's been incredibly important. The difference with open banking is that, of course, it is any bank to any bank in the UK and shortly across Europe. And with standards opening up in Canada, in Mexico, in America, South Africa, Singapore, this is going to be an experience that's possible across almost any part of the world. And that is a really interesting concept to consider, that we can make these closed loop experiences that have existed possible for anyone, any consumer of any bank. However, if the authorization journey is as it is today, which is that every single payment needs to be authorized with a biometric authentication, that makes it tricky. It makes it tricky to create the same sort of slick experiences that you might see on WePay or Alipay. And then it does beg a question as to whether or not e-wallet providers that take money using open banking as a way of depositing into it are going to sit above the banking infrastructure and then use payment systems between merchants and between individuals to create the same sort of experiences. And from reading the announcements of PayPal and Revolut, that kind of super app concept that WePay and WeChat have existed in China, amalgamating services and being that financial services layer between all sorts of other businesses and consumers, is where they're beginning to position themselves. But with open banking, we don't need to have one closed loop monopoly. And for consumers, for investment optimization, for savings or tax optimization, and indeed for business lending, it's going to be a better, more democratic, more interesting market, certainly a more better value market, which the CMA was hoping for with open banking, if we can implement an open loop system that has the same sorts of powerful experiences. So I'd like to conclude there with just some other use cases that I think are interesting and things that I've been thinking about as open banking has come to fruition. We have long since talked about a KYC utility in the UK, where the burden of doing KYC and meeting the regulatory requirements isn't necessarily something that is borne by every single institution in its own right. We've seen lots of institutions fined for not meeting KYC regulation, particularly as it's evolved in Europe. And it's become a real problem in banks that they're spending more and more on, and boards are increasingly worried about how to meet. When perhaps if one centralized body, or indeed potentially each bank, could meet a status of a customer, and then if they've taken on that burden of running the KYC and maintaining it, that they could get paid for it by other institutions who could share and port that KYC profile. Open banking could become a vehicle for that could make the data sharing far more optimal for people, meaning they don't have to onboard to every service individually. And that the government would know that someone was doing that KYC properly, they have got a smaller burden to do because the cost of it is being distributed much more evenly across the industry, and that where people are undertaking that, they can port that data to somewhere else and get paid fairly for it. That would enhance consumer experiences, and open banking definitely has the capability now and the API infrastructure to be able to share that data and build on the profiles that can already be shared. There's definitely an argument for enhanced fraud controls. You can see payments moving across the infrastructure between different institutions. And so not only invoice redirection fraud that I talked about earlier could be prevented by a predefined payment existing in an invoice where the details can't be changed, but you could also have that for consumer payments where you could look at scams that involve estate agents and valuers and lawyers around property. These could be eliminated by watching the money move and understanding who the parties are involved very quickly. But we've probably got to have a quid pro quo. The industry is asking for, if you don't already bank with the bank that you're receiving an open banking service from, or it's from a fintech, you're getting an awful lot of data as though you do, as though you are the primary bank for that business or for that consumer, if they permission their open banking data with you. And for some banks in open banking, that can mean up to 6 years of that history, even though the mandated requirement is less. And so we've got to think about how we create that value for the customer, that value for the business in sharing that data, and that there's some offset with what the service that they're being provided. I think the argument that maybe this involves, can create better decisioning, we can offer you products and services faster, quicker, easier, might be enough in the short term for short-term permissioning. But the ongoing permissioning where these services can really add value over someone's lifetime, as they go through different life stages, have different investment, different savings, or different borrowing needs, you've got to think about a long-term relationship. And I think that begins to redefine what it is that a financial institution can be to a consumer. If we boil down every transaction to an app-based interaction, and we do that in a remote way, or indeed, because of open banking, someone else other than the bank is doing that on your behalf, there potentially leaves very little room for a conversation with a consumer. And that's where the threat of open banking that I talked about at the start does come in. However, you could have a rich, a very feature-rich, engaged conversation. And the things that I talked about understanding from the data that were present at the start of the talk, they could glean information that are the sort of things that a private wealth advisor might talk to a very high net worth individual about. If they were getting divorced, they might have that conversation, and they might understand the financial implications for that, and they might be able to help someone plan for that. But you could potentially anticipate that from the data, of what's going on in someone's lives, and help them plan for it on a more automated basis. And so everyone can get that sort of private banking and wealth advice experience without necessarily having to pay for it. And that is the democratization and the inclusion, not that we create a very basic service for people to move money around or to be able to hold money. Of course, that's a normal facilitator. But beyond that, that we offer the same value-added services for everybody that perhaps the biggest businesses or the biggest or the richest consumers have had advantage of receiving for some time. And so, yeah, I'd like to leave you with that thought that harnessing the true value is about bringing those experiences to life. We can really transform payments experiences, and that can lead to lending, investment, and savings optimization experiences, which are really powerful, and we've seen being incredibly successful in other markets. Thank you very much.
Happy birthday. I had no
Thank
idea.
you.
Thank you for joining us. Well, we're having some drinks after this, so you can have a free beer on us.
Appreciate it.
There you go. How's that? I'm sure there's plenty of questions in the room. Please ask them, but I'm going to hand you a microphone. And that's not because we're in a particularly cavernous room and we need a microphone. It's because there's people watching on the stream. So is there anybody in here who is? Yeah. Please can we pass the microphone to the gentleman at the front here?
I've been watching Open Banking UK and the CMA 9, and whatever happens after OB is an open chapter, but how do we get from open banking to open finance and open data? Don't we need bits of consumer data right from Australia and maybe some digital identity exampled by Singapore? I mean, there doesn't seem to be the political impetus to go much beyond open banking, and I'm actually deeply concerned.
Yeah, I think that this is a key question, right? And the CMA 9 and the sort of regulatory burden is an interesting one where, you know, the industry was compelled to do something because of an in-depth investigation, and indeed, a fairly concentrated marketplace in banking in the UK. Now, the concentration of customers hasn't, been materially affected by open banking. And as I say, I think that's because we've yet to see the true value. We've yet to see businesses create the innovation that really shifts the way customers behave and therefore move their services. And indeed, the incentivized switching scheme that came from the RBS fine as well, that didn't necessarily create a different market dynamic of where businesses were transferring their banking to from where they had been, other than the normal dynamic where people shifted in the same sort of proportions. I think without regulatory compulsion, it's quite difficult to compel the industry in the current dynamic where banks are giving away a lot for free because they haven't seen the value in it themselves, and it costs an awful lot to implement open banking. I think the opportunity of having premium APIs where banks are being paid for the services that they provide and paid for the infrastructure. If banks are relegated to this payment infrastructure and the KYC service, which costs a load of money to run, and then the balance sheet and the risky lending, or some of the lending that other people don't want to do that costs a load to do, and indeed all the administration around that, or the obligation to run branches and provide services in communities, it's a lot of cost for the banks to bear without that relationship with the customer. So I think you've got to find a way of people using the bank infrastructure and using the KYC burden that the banks have, using the premium APIs and the payment services, using potentially the balance sheet, but providing services on top of that and gloss on top of that they pay the banks for using that infrastructure. And then there's some quid pro quo relationship that's going on in the industry, as well as one that's serving the end customer. I think if we don't head down that path, there'll be bigger and bigger resistance to doing it. And I don't think that just piling on regulatory burden on a particular set of institutions is the key answer. I think there are many good reasons where open finance can add a lot of value, and there's reason to extend the profile of what open banking has started. I think in accounting data is a key one. I think tax data and HMRC opening up their APIs would be a very sensible move that the government can make, particularly as tax is going digital. But the chairwoman of Santander Group in Spain has talked about this. Why is it that the marketplaces and the payments institutions and the telcos aren't forced to open up their data in the same way? I think if there was a sort of mutual obligation for everybody that's involved with holding large amounts of data about individuals and about businesses to bring that to the party, it could all be a better ecosystem and a more level playing field across industries.
Okay, I suspect there are some more questions in the room. We're actually going to have a panel discussion about this topic next. So I think what's probably a good idea is if I ask you one more question that's come in on the app on Slido.
Sounds good.
And then if we reset the stage, we have some chairs coming out. And then if people in the room are more than welcome to join in with the panel discussion, we've got a room full of people that know what they're talking about, so we may as well. That feels more sensible to me. So one of the questions that's come in, feel free to argue commercial sensitivity and move on. But someone wants to know, is open banking the biggest consideration for future plans within Santander where you work?
So I wouldn't say it's the biggest consideration, but it's definitely a material one. And we've launched a cash flow manager app this year, servicing small businesses, which we're hoping to scale next year, which is going to offer smart invoice services and cash flow prediction, and helping them understand the data and aggregate banking data from different accounts. I think definitely for us, if you don't bank a small business in particular, getting their bank data is a key part of the credit assessment and a key part of being able to do business with them and understand their risk profile as well as their needs and opportunities. So I think open banking is definitely going to play a part, certainly in our SME business, and a key part of our future. But I think with all the regulatory pressures that exist in the financial services industry and all the opportunities that exist as a result of digitization, it's just one of the many strings that we have to consider and be an important part of things.
Okay, thank you. What I suggest we do is we reset the page because Zita McMillan's going to join us, who's at the back there. Please do hold on to your questions, stay in the room. We'll reset the stage with some chairs and then we'll have a group discussion. Thank you.